With Timberland Bank. Next, you'll hear from Paul Wong, who will discuss how to get capital for your business. Stay tuned.
Please help me in welcoming Paul Wong.
Thank you. So I'm going to spend the next 2 hours talking about balance sheets and everything that is sexy of money. Okay? So thank you, Carrie, very much. As she said, Paul with Timberland Bank. My passion is business banking, and I'm pretty sure I've made that clear, so I'm not going to go ahead and hound on that. But I definitely appreciate you all for being here. Throughout my 19 years of banking, there's some things that I see consistently, and I want to share those with you. Some of those have actually already been talked about. But first, let's start with some cartoons, because I do like funnies as well. Small business loans. Your business plan seems to depend on winning a lot of state lotteries. Anyone can relate to that? Yeah. Of course, it's only $1. It's a small business loan, if you can get the dollar, right? So like I said, I want to give you some tips from a small business lender of things that I consistently see on a daily basis. And we do have some other bankers in the room too. I guarantee you see the same thing as well. So first and foremost, have a clear plan and resist the urge to grow too fast. This was written before. But you have to understand that banks are in the risk business, not the money business, okay? So it's really important that we want to see slow, steady growth. All business owners in the room want fast money now, right? Okay, well, unfortunately, banks don't like that. There's a thing called hard money lending. Guido, you've probably heard of him. He will allow you to do that faster, okay? But definitely having a clear growth plan, whether that's a marketing plan, whether that's a business plan of any sort, you need to have it. It's absolutely important. Don't buy too much equipment too fast, okay? I have a customer right now who, very successful company, but had the mentality for the last 2 years of, I'll just buy another vehicle. It's just another payment. So we have a line of credit with us. Well, he didn't tell us that he went out and bought 8 new vehicles over the year. Don't worry, it's just a payment, right? Well, when it comes to renew his line of credit, what do you think we have to do? He didn't qualify anymore. It's one of the hardest things you have to do. And yes, where you have to have a relationship with a banker to actually have that conversation with your growth. And that's a lot of things that I do with a lot of my customers is sit down with them, let's look at your financials, and let's plan. If you don't plan, you fail. Am I right? Have a backup plan if business slows down. Everyone went through 2008, 2009. That sucked, okay? For any business, regardless of what you were in, banking was surely no different. It's hard to save money. It really, really is. But you know what? 2008 and 2009 could happen tomorrow. What would stop it from happening tomorrow? So are you ready for it? Do you have something stashed away? Do you have that emergency blanket? It's an important thing. Be diligent in paying your bills. That's kind of a duh. But one thing I want to talk about is, like, for example, setting up automatic payments. That's a good thing. That really is a good thing. You don't have to worry about it. You don't have to worry about late fees. Set it up automatically. Taxes, L&I, all those things that you have to pay, try to set it up automatically. I know, easier said than done. There's a thing called cash flow, right? Okay? But if you have the ability to do that, definitely do that. Any sort of business debt, of course, have that set up as well. And work with your CPA to build cash reserves. Any business should actually have 30 to 60 days worth of backup funds. Again, I know, easier said than done, but that is the industry standard. So another thing that comes up is using a line of credit properly. I want you to meet Tim of Tim's Photography. No, it's not Tim. He's much smarter than this guy. Okay? This happens all the time. Tim has been using credit cards to finance his business for years. Okay. He went to a bank to do a deposit, and they said, hey, we can get you a line of credit for your business. Well, what do you think he said? Bring it on, right? He got a $50,000 line for his business. Good for him. Tim used $50,000 immediately to buy a bunch of new photo equipment. Here's where Tim goes south. Tim was making interest-only payments per year because it was cheap. Stupid Tim. Not you. Tim's line of credit came up for renewal after a year. What do you think happened? Tim's line of credit was denied. Stupid Tim. Here's the deal. Lines of credit, yeah, they have variable payments. It's interest only. It's a great tool, and a lot of businesses should have it. Notice I didn't say every business. I said a lot of businesses. They have variable rates, which right now can be a bad thing because we're in a rising rate environment. And usually there is a renewal period where you have to renew it 1 or 2, 3 years. The bank wants to make sure that you're still making money and that you haven't gone bankrupt yet. Okay? Yeah. It depends. Here's the bottom line. Short-term needs and working capital. That is the main reason for a line of credit. It is not to buy equipment. It is used for things that you're going to pay back within 30 to 90 days. If you can't pull money from that and say, I'm not going to pay it back in 30 to 90 days, then it is not the right thing for you to use. That's a thing called term loans. Fixed payments, fixed rates, fixed terms. If you do have to get a loan, you'll have that. You'll know it'll be paid off in a year, 2 years, 3 years, whatever the case is. But work with your banker for a solution. That is the ultimate goal on that. Again, long-term needs. Don't you ever put equipment or anything long-term on a short-term vehicle. It's the worst. What banks look for to approve loans? Thanks for my EBITDA segue. Before we get to there's a few things. Credit score. So 2008, 2009 wasn't as long as people think it was. Some of you may still possibly be suffering from some of those, as I know some of my business clients are. A company that I strongly suggest is Lexington Law. If you do need some credit repair, they kick butt at actually doing what they say they're going to do, and they will really help you get your credit cleaned up. Everyone's heard the cool commercials, freecreditreport.com. Okay? Well, first of all, if they're advertising, they're probably not free, because how are they going to pay for the advertising, right? Okay? Annual credit report is the only free one because you've probably never heard of it, because that means it's free. It doesn't actually ask for your credit card number. You can do it once per year and you will be able to see exactly what's on all 3 credit bureaus. It does not affect your credit score as long as you do it once per year. So stick it on your calendar and do it every single year. Strongly recommend if you haven't done it. Credit score is, of course, believe it or not, you can get as low as 300 on a credit score. That's not even getting your name right on the credit score. And then, of course, banks generally, we're looking for great credit, 730 or higher, and really good most banks can work with as well. So we talk about personal credit, but there's a little thing called business credit too that kind of hovers out there. So having business credit is important, kind of. Because, first of all, not all banks report to business credit bureaus. So if they don't. Business credit cards are really one of the only things that actually does. However, your vendors do. So a bank is actually going to pull the business credit report just to see how you're paying the vendors. It's not going to tell us anything about any sort of business loans you may have. Okay? So the bottom line is don't focus on business credit. Really focus on good personal credit, because that's going to be the most important piece. Do not pay for Dun & Bradstreet or any sort of those types of things. Those are made for larger corporations. And if you're truly looking to prepare yourself for business loans, again, it all goes back to your personal credit. It has nothing to do with these, because I'm sure you guys get calls from them all the time. Why do you think they're calling you? So they can get your $29.99 a month. Okay? Cash flow, again, very important. Why do you think I have a guy a dressed up guy with boxing gloves when I'm talking about tax returns? Oh, there's a fight. That's right. And you know what it is? It's between the banker and your CPA. Because you don't want to pay any taxes, and I want to make sure you're rich. So what do you think happens every year? It's a freaking battle every single year. So this is where a good banker and a good CPA will get together and strategize if you're going to be making a big purchase for the year. Maybe you're going to buy a building. Maybe you're going to buy a bunch of equipment. Whatever the case is, strategize. And that's the big thing when it comes to that with your CPA. So definitely let us know what's going on. As we talk about, there are sometimes things that we can add back on your taxes. No, if you went to El Gaucho for dinner every single night, I cannot add that back when looking at a loan. But just we talked about EBITDA. Sounds like something from the movie E.T., right? EBITDA. So again, we talked about before earnings, before interest, taxes, depreciation, amortization. But here's the bottom line. This is why you should care. Okay. Sorry. Just kidding. I skipped one thing. Also, some banks can add back those one-time expenses. You had a large issue one year. Maybe you had employee theft. Okay? That sucks, and we're going to want to know the story. But it's something sometimes we can work with you because clearly you didn't plan on that. Okay? So cash flow example. This is about as mathy as I'm going to get, I promise. But I think it's important for business owners to know. Okay? Everyone has a P&L. Everyone looks probably at your top line and then your bottom line, right? So let's pretend your bottom line is $10,000. Some of you may be happy with that. This is how a bank is going to look at your taxes in your world. That $10,000, we can add back any sort of interest expense that maybe you paid for that year, whether that's from anything, okay? We can add back taxes. We can add back any sort of depreciation. And sometimes if you have amortization, we can add that back. Ask your CPA on what that. Most people actually don't have that. And again, like I said, a good banker can actually add back. Maybe you had to redo something on your HVAC system or something like that, and we can add that back to your cash flow. So instead of now $10,000 as your bottom line, $23,200. Well, that looks better. The bank's doing something for you. There's a shock, right? So that $23,200 means that you have this money here in this hand available to pay debt. Okay? So say for example, if you're a business and you have $1,000 in monthly debt payments, maybe that's a car loan, maybe that's equipment, whatever the case is. You times that by 12, and that's your annual debt payments. And you divide it by the $23,200 and you get a percentage of 1.93. To you, what does that mean? It's a number. To a bank, that's a big deal. That's 80% of our underwriting, okay? That means you can afford these payments 1.93 times. Banks look for 1.25 or better. So would I lend money to this business? Yes, as long as they can fit to that 1.25. I'll pause as you're taking a picture. Another thing that you can do too is on a lot of your accounting softwares, you can actually put EBITDA on your P&L. Some can, some can't. Check with your CPA or accountant, but I think that's a very important thing to have. This happens all the time. Here's the number one Paul pet peeve. Never go to a bank and say, how much can you give me? I will close up a binder so fast if I hear that and you're done. Because you have no plan. What do you want to give me? No, what do you need? We're just not going to just give you money. We're not a nonprofit. Or, well, I don't want to put any money down. Thanks. There's the door. We need to see shirt in the game. Okay, very important on there. And it all depends on what you're trying to buy. If you want to go out and buy a personal car, you can go to a car dealership and get it with no cash down. Good. Go do that. That's not a problem. But for your business, it's a different world. Okay? Generally speaking, for an auto, you're looking for 10 to 20% down. And this is normal banking. Real estate, 10 to 25% down. Any sort of equipment is also at about 20 to 25% down. If you want less than that, then you're going to be looking towards Guido, and he can help you. This is general banking standards. Am I right, bankers? Collateral. Now that's a sexy building. Max, my underwriter back here, by the way, probably thinks I've financed that before. Does the bank want what you're giving, or do you have anything to give as collateral? Most banks are collateral lenders. They want to make sure that you have collateral and you have cash flow. If you have both of those, you can probably walk away with funding, okay? If you want a line of credit, do you have accounts receivable? Accounts receivable, do you have somebody who's already got a contract to pay you? Do you have hard assets, a vehicle, real estate, something to give to us? Unsecured loans are tough.
So when you do one of those, I don't know what they call it, banking, the personal, you sign it just with your name type thing, is it then your credit that you're using as collateral?
If you just sign your name for a loan, and it's a business loan, those are very rare. If you found one, good for you. But generally speaking, it's against your personal credit, if you're ever able to find those. Generally speaking, when you don't have anything to secure with, that is where a little thing called SBA comes in, and it's an awesome program. SBA does not give you money, banks do. SBA insures the bank when we give you money. So if you don't pay me, I still come after your legs, but SBA can pick up the difference of whatever I can't get from you. Okay? So that is SBA in a nutshell. It can be used anywhere for startup costs, equipment, inventory, working capital. There's usually lower down payment options. Here's the number one rule of SBA. They cannot turn you down for lack of collateral. Period. End of story. Now we may find another reason, but it cannot be collateral. SBA, we'll lend to startup businesses. Timberland does it all the time. I do it all the time. We do use projected income within reason. Anyone can make up money, okay? So it has to really make sense. Again, SBA 7A loans, there's two different types of programs, but generally, again, that working capital equipment is the main thing there. You can't use it for speculative investment kind of opportunities, and you really do need a business plan. Again, plan. This is a link I want you to write down if you ever do want a loan. And it's the coolest website SBA ever put together. It's called the SBA Link Program. You guys have all have heard of Lending Tree, where they give, you give them your information, they spider it out to everybody in order to make sure, and you have other bankers fight for your loans. That's what it is in SBA land, and it's an awesome program. I get probably 5 or 6 emails a day from local Pierce or Thurston County businesses looking for funds, and it comes from this website. Now, some are unique, but I've actually financed quite a few as well. So again, it's an awesome tool if you are truly out there looking for a loan and having a tough time. What if I get turned down? Well, here's the thing, don't take it personally, because sometimes it's not you. Seriously, it's not like a date. Seriously, sometimes it's not you. Every bank has a specialty. We used to work for a bank where we did tons of mobile home lending. You can't find anyone that does that anymore. And that bank did go under. Bank concentration levels. We have tons of buckets of money. And when the bucket is full, we're done. So if we're trying to lend on a certain type of property and our bucket's full, don't take it personally. It's not you. I wish I could lend to you. But unfortunately, I have to have you go to somebody else because our bucket's full. And of course, you can use angel investors, family and friends, venture capital. There's lots of those other types of places out there. Financing to be cautious of as I wrap up here. Yes, this is Guido, and there's plenty of them around. You may have heard a lot of these types of companies. I'm not here to tell you to do it or not to do it, because everyone is in a different situation in their life. And I'm not here to judge. But here's the deal. Some of these companies have daily, weekly payments. Can you imagine having a daily payment? I mean, you better have some good cash flow in order to do that. So again, it all depends on your situation, okay? Resources, but first I want to do a quick poll. Has your business banker ever been to your place of business in the last year? Raise your hand. That's more than I have seen in a lot of rooms. That's awesome. Keep your banker. Keep your banker. Have you recently asked your banker for advice when you're going to make a large purchase or major change to your business? Impressive. Thank you. And that's good. And that really is what it is. You can't always blame the banker. Sometimes you have to look inside as well. So definitely take a look and work with your banker, because we really do want to work with you. I'm a huge believer in this, in having a proper stool. And that is, I knew you were going there as soon as I said that. There goes Doug. You know, if you miss one of those legs of the stool, down it goes. And I think it's very important that everyone has a very good insurance agent. We have one in the room. Business attorney, banker, and a CPA accountant. Very, very important. And if you're missing one of these relationships, talk to somebody here in the room, because I bet you they can link you up to a really good one. So again, Paul with Timberland Bank, we're a local community bank, and again, if we can help, I'd really appreciate it, and I thank you for your time. Talk about like switching hats or something.
You don't leave, you have to give yourself something.